For this session, we will introduce your income taxation. Generally, we will define, know the purpose, the features, the characteristics of income taxation, so that as we go through the taxation of different income items, um, we will learn why is it like that? Why is it taxed like that? Why is it global? Why is it schedular? So, generally, when we talk about taxation, it is really transactional. So, what do we mean by transactional? We tax the transaction itself. We tax the transaction itself. And when we talk about transaction, a transaction can either be a gratuitous transaction or it is an onerous transaction. Gratuitous transaction or onerous transaction. That depends whether there is a consideration or there's no consideration. So if ever it is without consideration, it is known as gratuitous. If with consideration, it is known as onerous. So we've learned before under gratuitous transactions, we have either donor's tax or ST tax. It is subject to donor's tax if ever there is a transfer or a transaction during the lifetime. So this is made inter vivos. For ST tax, there is a transfer at death. So this is mortis causa. Now for onerous transactions, what we need to determine is whether or not the taxpayer is engaged in trade or business. If your answer is yes, there are two types of taxes, business tax plus income tax. But if your answer is no, meaning there is no business, therefore, um, what is subject to tax is only income tax or only subject to income tax. Again, if there is a trade or business, there are two taxes, business tax and income tax. A tax on the transaction as to your business and a tax on your income. While if there's no business, it is only purely income tax. Purely income tax. Um, Now, therefore, income tax is businesses or individuals can be subject to income tax as long as the transaction is onerous. Why is it important for you to determine that taxation really is transactional? If you look into exempt transactions, generally you don't exempt an entire business or an entire individual. That really rarely comes. Okay, that is rare. What you exempt really is a transaction. So for example, sale or importation of your agricultural produce in original state. So what is exempted there is the sale or importation, meaning the transaction, not a business itself. Because if ever it is a business, for example, what should have been exempted is a business engaged in agriculture. Okay, the tax code does not provide it that way. Tax code always provide exemptions per transaction. Therefore, when you talk about business taxation or income taxation, what you need to determine is the type of transaction. So it is important for always put in your mind that you are taxing a transaction. For example, um the business is a lending business, and a lending business has different income. So for example, it has a rental income, it has an interest income, aside from that, it has any lending income. So those are the types of income. You don't tax the entity itself, but you tax the transaction as the income. Therefore, when you try to learn either business tax or income tax, you must learn the type of transaction. And based on the type of transaction, you tax it. So I hope you try to ingrain that in your mind that as you go into income taxation, there's a type of income or there's a transaction which you are subjecting to taxation. So as we go through, I hope I can help you determine the type of income and at the same time, how do we tax that income? So let's start now the introduction on our income taxation. Income tax. Income tax is a tax on income, whether gross or net. So what we need to determine here is the income, and then we tax it either gross or net. So when we say tax on income, what we know here as an income is the gross income as provided under the tax code. And when we say gross or net, this gross income can be with deduction or without deduction. So if ever it is purely gross income multiplied by a tax rate that is taxable at gross. If ever that is gross income less any deduction multiplied by your tax rate, that is known as net income. Okay, basic is the rule that if you are taxing something, basic is the rule that if you're taxing something, you need to determine the tax base multiplied by tax rate. Normally, when we talk about the tax base, this is the subject matter of taxation. So, since we are under income tax, it means that our tax base is the income itself. Now, how do you tax it? It's either gross, meaning there's no deduction, or net, meaning there is a deduction. And then you multiply that to a particular tax rate. So, as we go through into your income taxation, you will learn that really there are income which is purely subject to tax at gross, and there are types of income which is purely subject to tax at net. And then next, nature of income tax. So the first nature of income tax is direct. Why is income tax direct? Because the one who is subject to tax is also the one to pay the tax. We call this one as the impact and incidence of taxation falls under the same person or entity. That's why it is direct. So if ever you are subject to income tax, you're the one liable to pay the income tax. Next, it is an excise tax. Why is it an excise tax? Because you have the privilege to earn an income. So since you have the privilege to earn an income, then you are subject to tax. Next, it is an ad valorem tax. Why is it ad valorem? Because it is based on the value or the amount of income. As we said, the amount of income differs depending whether you are subject at gross or at net. Gross without deduction, net with deduction. Okay. Next, it is general. Why is it general? When we say general tax, this is in accordance to whether the purpose of taxation is either primary or secondary. So when we say the purpose as general, it means that the income tax is for revenue raising purposes. Whenever you encounter taxation as to nature, this determines the type of tax. For direct, this is as to imposition, whether it is direct or indirect. And we said income tax is direct. For excise tax, this is as to your privilege. Next, ad valorem as to the value, and then general as to purpose. And then as to taxing authority, we have here national. Why? Because your income tax is imposed by the national government. Now let's go to your purpose. The purpose of your income tax is to provide a large amount of revenue. It provides a large amount of revenue. Why? Because normally most items or most transactions are subject to income tax. Therefore, a portion of the revenue of the government comes from income taxes. Next, for the secondary purpose, it removes inequalities in the distribution of income and wealth, which are deterrents to social progress. Why? Because it is direct. So when we say it is direct, it means that it involves a progressive system of taxation. So whoever is the who has the impact and incidence falls on the same person. So it means that the higher your income is, the higher the tax. So I hope you still remember the concept of a direct tax in consonance with a progressive system of taxation and in consonance with your method of cost of allocation. So if ever that is a direct tax, the system of taxation is progressive. So when we say it is progressive, there are more direct taxes rather than indirect taxes. And when we say method of cost allocation, this is either ability to pay or benefit received. So the method of cost allocation here is ability to pay principal. How about if ever that is an indirect tax? Generally, if that is an indirect tax, we say that the system is regressive tax system. And the method of cost allocation is the benefit received theory. So for income tax, it is direct. For VAT particularly or business taxes, it is indirect. Now let's go to the features of your income tax. So the first feature of your income tax is that it is comprehensive. So what do we mean by comprehensive? So when we say comprehensive, if you still remember the features of taxation, which is our mnemonics here is COPS. What is COPS again? It is comprehensive, it is unlimited, it is plenary, and it is supreme. So why do we say that your income tax is comprehensive? So when we say comprehensive again, we can tax any subject matter or object as a mode of cost allocation. So you try to tax any subject matter. So when we say income tax is comprehensive, it means that it has a lot of criterias or basis to tax. So comprehensive means basis to tax a particular subject matter. So what is the subject matter here? Again, we said our subject matter is the income. So what is the basis to tax the subject matter so that we can say it is comprehensive? Generally, we tax an income first based on the residence. So if the taxpayer is here in the Philippines, then we tax the taxpayer in the Philippines if ever the income is earned here in the Philippines. But if ever the taxpayer is not uh, a resident of the Philippines, then we look into the place of income. So for example, you are there is a non-resident alien. There's a non-resident alien. However, the non-resident alien entered the Philippines and there's an income here in the Philippines. So although the non-resident alien is not a resident, but the place of income is in the Philippines, then it is subject to tax. Another rule why your income is also comprehensive is that even if you are not resident, even if the place of income is not in the Philippines, we look into the nationality. Okay. So let's say, for example, non-resident citizen. Non-resident citizen. So it is not a resident. The place of income, of course, is not here in the Philippines. But let's say it is still within the rule of our taxation per nationality. Therefore, it is still subject to tax here in the Philippines. That's why it is too comprehensive. Why? Even if it does not meet this criteria, you can meet the second criteria. If you do not meet the other two criteria, you can meet the third criteria. As long as you are in any of those bases to tax you for income, then you are subject to income tax. That's why we say income tax is comprehensive. Another one, income tax is progressive. So when we say progressive, again, it is more direct rather than indirect. And more about direct and indirect, it is also subject to graduated tax rates. When we say graduated tax rates, the higher the income, the higher the tax. The higher the income, the higher the tax. Again, what is the method of cost allocation? The method of cost allocation is the ability to pay. Next, pay as you file. Another feature of income tax is pay as you file. So, sir, what do we mean by pay as you file? So, when we say pay as you file, if you file your income tax return, you already need to pay the tax due. Okay? Upon filing, pay the tax due. Next, withholding tax system. So when we say withholding tax system, our income tax follows withholding tax system. It means that the income payer will withhold a certain amount out of the total income payment. Okay? Again, income payer. So we have here income payer and income payee. So the income payer will withhold a certain amount paid over the income payee. So the income payer is known as the withholding agent here. Who is an income payer? Anyone who pays someone and the other person earns an income. So for income payer, that is considered as an expense. Income payee, that is considered as income. So someone who pays an expense and on the other person that is considered an income. So upon the payment by an income payer to an income payee, there is considered a withheld amount. So for example, the total expense should have been 10,000. However, you withhold 5%. So let's say this is 500, then you will only pay 9,500. What is this 500? That is the withholding tax. That is the withholding tax. And when we talk about withholding tax, there are two types of withholding. So what are those types of withholding? That can be a final withholding tax or a creditable withholding tax. Final withholding tax or a creditable withholding tax. So what is the difference of a final withholding tax to a creditable withholding tax? The first difference is the amount withheld. So in a final withholding tax, whatever is the amount withheld is equal to the tax due. But in a creditable withholding tax, the amount withheld does not necessarily mean it is the tax due. And as to the subject matter, in a final withholding tax, it only applies to certain passive income. While for creditable withholding tax, it applies to active or passive income. Sir, what do we mean by withheld is equal to your tax due? So let's say, for example, the amount withheld here is 500, right? If ever the tax due really is only 500, then you do not need to file anymore. But in creditable withholding tax, let's say the real tax due here is, since you elect 8%, it is 800. So 500 is a creditable, but the tax due is 800, so it is not equal. So what will happen? You need to still file. You still need to file. Why? Because the amount withheld is not equal to the amount due per your tax return. So another difference, of course, is in your final withholding tax, no need to file your ITR. For creditable withholding tax, it should be part of your ITR because it is subject to regular income taxation. So that is your withholding tax system. So under withholding tax system, again, there's an income payer and income payee. And under the law, the income payer is required to withhold an amount out of your income payee. We call that one your withholding agent. And we all know that a withholding agent depends whether you are constituted as such. Next, substituted filing. So what about substituted filing? So in substituted filing, the income payer is the one filing. Substituted filing, income payer is the one filing. Income payer is the one filing. So what do we mean by that? It means that instead of the income payee filing for the income payer, it is already the instead that the income payee will file for its own tax return, it is now the income payer who files for the income payee. So what happens here? It means that the income payee does not need to file anymore. The income payee does not need to file anymore because what is filed already by the income payer is considered sufficient. So when can there be only a substituted filing? The only way that there is a substituted filing is if ever you are a purely compensation income earner. Purely compensation income earner. Again, in a substituted filing, the general rule is that the income payee must file. Okay, must be the one to file. What is the exception to the rule? The exception to the rule is the substituted filing. So what happens in a substituted filing? It is not the income payee who files the tax return, but it is the income payer. And when can there be an instance that there is a substituted filing? If you are a purely compensation income earner. Purely compensation income earner. And what are the requisites for this purely compensation income earner? First, of course, you are a pure compensation income earner. Second is that you only have one employer. And third, the amount of tax withheld must be equal to your tax due. Tax withheld is equal to your tax due. Okay, so we said substituted filing, income payee will not file, but it is the income payer. But sir, you said a while back that in direct taxation, the one who is subject to tax is the one who earns the income. In short, it is the income payee. Yes, because what is again subject to tax here is the income payee, but it is only filed by your income payer. Okay? It substituted filing, take note of this. Substituted filing does not really go around the direct taxation. Kasi 'di ba sabi natin, pag direct tax, ang natatax ay yung earner. And who is the earner? That is the income payee. Pero sa substituted filing kasi, ang nangyari lang, ang tinax pa din ay si income payee, pero sino nag-file para kay income payee? Ang nag-file kay income payee ay si income payer. Oh sir, nalito na naman ako, paano naman yung pay as you file? Pag pay as you file, ang ibig sabihin naman yan, sino ang tinatax? Si earner. It is the income payee. And sino ang nag-file? Siya rin, si income payee. Okay? So, dito, ang pinagkaiba lang nila is still the person who is subject to tax is the earner or the income payee because income taxation is direct. However, as the substituted filing, who files? The payer in lieu of the filing of the purely compensation income earner. Tandaan nyo, saka lang nagkakaroon ng substituted filing kapag ang earner ay purely compensation income earner. Huwag kayong malito sa direct taxation, pay as you file, at saka substituted filing. Next, schedular system. So what do we mean by schedular system of taxation? So in your schedular system of taxation, you determine different types of category. So there is a type of category, and based on that category, there is a different tax rule or tax treatment. So a schedular system applies to individuals. I'll erase some items here. This one. Okay. A schedular system, what happens in a schedular system is that there is a tax treatment depending on the category. So in short, there will be a category first before you can tax it. If we try to compare it with global system, what happens here is that tax treatment is common. The tax treatment is common. So the tax rate is uniform. The tax rate is uniform. So schedular system, sched system applies to individual. Why? We determine first the type of income. So for example, if that is final tax, or it is regular income tax, or is that a gain or dealing, is that an income on your employment, etc. So we look into the type of income, and each type of income, so there's a type of income, and each type of income, there is a different taxation generally. How about in a global system? In a global system, it applies to your corporation. Why? It has a uniform tax rate. It has a uniform tax rate. If you remember, all sources in your corporation generally whatever is the corporate tax rate that applies. If, for example, the income is interest, or the rate is 20%. But if ever that is an individual, the amount of interest or the final tax on interest differs. So let's say, for example, 20%. Okay? Interest. Ito na lang example natin. Pag individual, sa interest, ang final tax niya ay 20%. Assuming resident citizen yan. Tapos, pag corporation yan, corporation, generally, it is 20%. How about if ever long term? Pag long term yan na interest, di ba sa individual, pwedeng 5% to 20%. Pag sa corporation, lagi lang siyang 20%. Yun yung ibig sabihin natin sa global taxation. Sa global taxation, anuman ang income niya, same ang rate niya. Pero sa schedular system, nakadepende yung rate sa type of income. Okay? There is a tax treatment depending on the type of income. In a global system, the type of income generally, you disregard it. Why? Because you have a common tax treatment among all types of income. So if you put this in your mind, it is easier to block out income taxation. Normally, corporation, just remember the rates. Whatever type of income, normally the same rate. But for individuals, we try to categorize it first. We determine the category, and based on that category or the type of income, there is a different rate. So if ever you understood this feature of income taxation, it will really help you a lot as you go through as we go through the discussion of income taxation. So again, what are the features? First, comprehensive. Why? There are different bases of taxation. Second, it is progressive because it is direct rather than indirect. And it is direct means the system of taxation is progressive system wherein the tax base increases, the tax rates also increases. Next, pay as you file. Upon filing, you need already to pay the tax due. Withholding tax system, there are two entities here, income payor and income payee. The income payor has the expense. Income payee is the income earner. And the withholding tax, again, either final or creditable. Next, substituted filing happens only if that is a purely compensation income earner with one employer. Sir, how about if ever I have multiple employers? Does it mean that I will not be, I will still file because I cannot acquire the substituted filing? Yes, because again, substituted filing applies only if there's one employer. Again, the general rule in substituted filing or the general rule in filing, whoever is the income earner or the income payee must file its own return. However, in substituted filing, whatever is the amount withheld kasi yun na yung tax due. And sabi natin, hindi na kailangan mag-file uli kung pareho naman yung amount withheld dun sa tax due. Next, schedular and global system. This is as to the imposition of your tax rates. For schedular system, there is a different tax treatment depending on the type or the category of the income. In global system, whatever is the type of income or category, you will tax it uniformly or in common. So we said schedular applies to individual while global applies to corporation. Now let's go to your tax system versus tax schemes. Why is this again important for our introduction to your income taxation? For tax system, there are two modes of system or taxation for income. One is gross income. When we say gross income again, whatever is the gross income, you just multiply it to your tax rate. And then we also have your net income. That is gross income less your deductions multiplied by your tax rate. So what is the difference here? It's still the same that there is an income. The difference here is the imposition of your deductions. And deductions under the tax code can either be optional standard deduction or itemized deduction. So if ever it is an optional standard, normally 40%, itemized, all items of expenses. Okay. And generally, in your OSD, it does not follow the substantiation requirements. What is a substantiation requirement? It means that when we say substantiation requirement, it follows your strictissimi juris principle, wherein anyone who claims an expense or a deduction, the burden of proof lies on that taxpayer and liberally in favor as to the government. So it is construed against the taxpayer, but in favor of government. So in your substantiation requirement, what it means is that if ever you will claim expenses, you must prove that there is an expense. So it is properly substantiated. So the necessary receipts are there, the record withholding are there, properly recorded in your books, etc. Kaya nga, anything that decreases the tax due is strictly construed against the taxpayer. Naalala nyo to? And ano yung mga yon? Pwedeng deduction, pwedeng exemption, pwedeng credit, etc. Anything that could decrease the tax due is strictly against the taxpayer. But if ever it increases the tax due, it is against the government. So your substantiation requirement comes from your strictissimi juris rule that in construing whatever is that deduction, it must be against the taxpayer. So if OSD, no substantiation, itemized, there is a substantiation requirement. Okay, gross income taxation, walang deduction. Net income taxation, may deduction. Now, as to our tax scheme. So why is it important for us to determine the tax scheme? Because when we talk about tax scheme, in an income or the subject matter is only subject to either final tax or regular income taxation. An income is either subject to final tax or regular income taxation. So kung pasok siya dito, hindi siya pwede dito. Kung hindi siya pwede dito, dito siya. Bakit importante nyo tong alam? Kasi dapat sa isa lang siya pwedeng matax, hindi pwedeng matax sa dalawa. Kasi pagka dalawa, that is direct duplicate direct duplicate taxation or also known as your double taxation. Pero ang rule dapat, eto lang, hindi pwede dito. Eto lang, hindi pwede dito. Okay. So, let's say for example, gains or dealings. Okay. The income is gains or dealings. So, there are items subject to final tax and items subject to regular income tax. So, on your gains or dealings, we first determine whether the property is an ordinary asset or a capital asset. If that is an ordinary asset, it is always subject to regular income tax. But for a capital asset, you determine whether it is a real property or a stock directly to buyer. If real property or stock directly to buyer, it is subject to final tax. What do we call the final tax here? We call it your capital gains tax. 6% for real property, 15% for stocks. How about if ever that is an other capital asset? Again, it is subject to RIT. So as I told you, it is very important to determine the type of transaction or the type of income. Our type of income in this case is gain or dealing. And in a gain or dealing, we first determine whether it is an ordinary asset or a capital asset. Why? Because this follows your tax scheme, whether it should be subject to final tax or regular income tax. So the only thing subject to final tax here is a real property and a stock directly to buyer. 6% for real property and for stock directly to buyer, 15%. Why is it a final tax again? Because when we say final tax, it will not be included anymore in your regular income taxation or in your ITR. So once you have a sale of real property, classified as capital asset or is stock directly to buyer, classified of course as a capital asset, then it is considered as subject to final tax. All other else RIT. Okay. Another example. Passive income. So for passive income, um, there are items subject to final tax and also items subject to RIT. The most common example of passive income subject to final tax are your interest, dividends, royalties, prizes, and winnings. It is subject to final tax. If not, then it is subject to RIT. It is subject to RIT. Okay, another one. Business or professional income. Business or professional income. So this is the income. So what is the final tax and what is the regular income tax? The final tax is the 8% gross income tax. What is that 8% gross income tax? If ever you elect 8% and you are considered non-VAT, then you are subject to 8% tax. But if not, then you will follow the regular income taxation. And under the regular income taxation, then you need to file your net income. Ganito kasi yan, guys. Pag final tax ka, generally, you are subject at gross. Pag regular income tax ka, you are subject at net. As a rule, halimbawa, yung real property natin. Pag nagbenta tayo ng real property, generally, kung ano na yung amount or yung consideration or yung fair market value or consideration, whichever is higher, yun yung 6% natin, di ba? Wala na tayong ibabawas doon. So, ibig sabihin, ang tawag natin doon ay gross income taxation. There's no more deduction. But, if ever, other capital assets yan, then pwede natin siyang i-RIT. Ano yung RIT natin? So there's a gain on sale. Also, there can be loss on sales, etc. Or expenses which could decrease our income. How about in your business or professional income? Final tax na is 8% gross income tax. So magkano na yung income, yun yung subject natin sa tax. Pero pag RIT siya, yung income, kailangan pa natin maglagay ng deduction natin. Either OSD or itemized deduction. Okay, another one. Aside from business or professional income. Another one is employment income. Employment income. As a rule, employment income is subject to RIT. It is subject to RIT. But there is one final tax on your employment income. What is this? Your fringe benefit tax. What is this fringe benefit tax? These are items given as a fringe benefit to your managerial or supervisory employee. Bakit, sir? Kasi once nasa subject na yan ng fringe benefit tax, hindi na siya isasama sa RIT. So, importante yan na ulitin natin. Ang income taxation, it follows a tax scheme. Ano ang tax scheme, sir? Na pag na-tax na siya sa isa, hindi na siya pwedeng i-tax sa iba. So pag na-tax na ng final tax, huwag mong i-tax ng RIT. Kung RIT siya, final tax. Kung hindi siya RIT, edi final tax naman. Oh, ito yung mga examples natin. Halimbawa, sa gains or dealings. May items na subject to final tax, ang tawag natin ay CGT. Pag na CGT na yan, hindi na siya pwede sa RIT. Another one, passive income. Pag na-subject na yan sa final tax, hindi na rin uli siya papasok sa RIT. Another one, business or professional income. Pag sinubject mo siya doon sa 8% na GIT because you elected the 8% and you are considered non-VAT, then hindi na yan papasok sa RIT. Another one, for your employment income, assuming you are a managerial or supervisory employee, pag nabigyan ka ng fringe benefit, since na-subject na yan ng fringe benefit tax, hindi na pwede ng RIT. Ganun lang siya. Kung pasok sa RIT, kung pasok sa final tax, hindi na RIT. Kung hindi pasok sa final tax, ulitin ko Kung pasok sa final tax, hindi na RIT. Kung hindi pasok sa final tax, it is subject to regular income taxation. It is subject to regular income taxation. So, therefore, it is always important for you to determine what taxes are subject to final tax before you go to RIT. Kasi yung final tax, ang dali lang Gross income times tax rate. Ang dali. Pero yung net income taxation, medyo papahirapan ka pa kasi mag-claim ka pa ng deductions and maglalagay ka pa ng tax rate. Okay. Final thing. If ever that is a gross income tax, it is proportional. What is proportional? When we say proportional, a certain percentage out of your income. Percentage multiplied by income. Ganun lang siya. Kaya nga ganito yung rule natin. Gross income times tax rate. Yung tax rate mo dito ay fixed percentage. Okay? Fixed percentage. How about if ever regular income taxation? If ever that is a regular income taxation, subject to net income taxation, your tax rate is progressive. Do you still remember the types of taxes? Types of taxes as to tax rate, di ba? Either proportional, progressive, and regressive. Proportional, fixed percentage. Progressive, habang tumataas yung tax base, tumataas yung tax rate. So sa ating RIT, it follows a progressive. So it follows the schedule. It follows the schedule or the tax table or the tax table. Okay? So let's talk about our tax table. Let's talk about our tax table. So under your tax table, again, when will your tax table apply? Generally sa RIT. Bakit, sir? Kasi ang RIT natin ay progressive. Okay? And pag progressive, net income taxation yan. Pag proportional, final tax generally yan. Ang tawag natin doon ay gross income taxation. Wala kang masyadong binabawas. Kung ano yung gross income, yun na siya. Okay? Kung medyo maplat nyo doon sa utak ninyo, maplat nyo na ganito pag corporation, ganito sa individuals, I think it will help you a lot as we go through your income taxation. Okay, so let's go to your tax table. Let's go to your tax table. So the tax table, as we said, is progressive. The tax table is progressive. And generally, I don't want you to rely on the tax table that will be given to you soon. And it is much better if ever you know the tax table itself. I mean, you know how to compute it. So, since it is now 2024, so we follow the 2023 onwards tax table. So, the first thing that you need to determine here is the amount of taxable income. So, first 0, and then 250, and then 400, and then 800, 2 million, and then 8 million. Next, you need to determine the tax rate. You need to determine the tax rate. The tax rate here for 0, it is exempt. 250, 15, and then increment of 5. Increment of 5. So 15, 20, 25, 30, and 35%. Okay. So yan yung ating tax rate. Next, once you memorize these two items, it is now easy to compute for our tax table or whatever is the amount or minimum amount. So first, you create a range for your taxable income. So this is 0 to 250, 250 to 400, 400 to 800, 800 to 2 million, 2 million to 8 million, 8 million over. Okay. So ang una lang ninyong gagawin, i-memorize ito at saka i-memorize tong tax rate. And then, you can now easily compute for the tax. Okay, so what is the highest tax to be paid under this? Ganito kasi yung rule. Yung highest tax in previous, the highest tax in previous range is the basic tax. Okay, on the subsequent range. So kung ano yung highest tax dito, kung ano yung highest tax galing dito, yun yung dito. Yung galing dito, yun yung dito. Ganun siya. Okay, let's compute the highest tax. 0 to 250. May tax ba siya? Sabi dyan, it is exempt. So, ang highest tax niya ay 0. So, anong highest tax nito? 0. Itong 0 na to, pupunta as the first tax base. So, this is 15% plus 0. Now, let's compute the highest tax here. Magkano uli yung tax ng 250? Ang tax ng 250 ay 0. Tama. So in short, ang itatax mo na lang dyan ay 150,000. So 150,000 multiplied by the rate of 15%, magkano yan? 150 times 15%, we will get 22,500. We will get 22,500. Okay. So yung 22,500 na yan, yan yung ating highest tax for this bracket. Highest tax for this bracket. And sabi natin yung highest tax sa bracket na to, yun ang gagamitin yung basic tax on the subsequent one. So plus 22,500. Okay. So anong tax ng 400,000? Ang tax ng 400,000 ay 22,500. So 22,500 na yan. Ngayon, kung may tax na ang 400, ang matatax na lang dito ay yung difference na 800 less 400. So may 400k ulit. 400,000 multiplied by the rate. Ang rate natin dyan ay 20%. This is 80k. Plus 22,500, that is 102,500. Therefore, ang highest tax naman dito ay ang highest tax or ang tax ng 800,000 ay 102,500. Ang highest tax ng previous range, yun ang basic tax ng susunod. So this is 102,500. Another one. Alam na natin yung tax ng 800k. Tama? 102,500. So ang itatax mo na lang dito, yung kulang. 2 million less 800, 1.2 million. So 1.2 million times yung rate na 25% plus 102,500. 1.2 times 25%, that is 300k plus 102,500, 402,500. So ang tax pala ng 2 million ay 402,500. So ang highest tax, 402,500. So sabi natin, idadagdag mo yan sa next bracket. So ang tax ng 2 million, ano uli? 402,500. So magkano na lang natira dyan? 6 million. 8 million less 2 million. So 6 million multiplied by the rate of 30%, this is 1.8 million, plus yung tax ng 2 million na 402,500, naging 2202,500 siya. Kaya ang basic tax naman nito ay 2202,500. So ang tax ng 8 million, 2202,500. Kaya nakuha yung inyong tax table na if ever 0 to 250, it is exempt. If 250 to 400, it is 15% plus 0. If 400 to 800, that is 20% plus 22,500. 20% in excess of 400,000 plus 22,500. And then for 800 to 2 million, it is 25% in excess of 800,000. Ganun naman siya. So tuloy-tuloy hanggang nakuha yung 2202,500. Why is it important? Kasi mas magandang alam nyo yung rationale kung bakit ganun yung tax table kesa naman mag-rely kayo lagi. At least alam niyo kung paano siya nakuha. Okay? That's it for our introduction to income taxation.